today.
So, Bryn, it's not like you've been negative, but I don't think anybody on the show has been as positive as Farmer Jim has been. And I'm wondering how you view the landscape today and whether things have now fallen into place for a pretty decent, if not sizable, move over the next few months.
Yeah, well, I mean, it is feeling reminiscent of, a Goldilocks type economy, or that phrase that we've used in the past. I think it's really important to understand that, the base rate of rates matters. And where everyone, got so hyper about the Fed taper and raising rates, well, the base rate matters. And I think the market's starting to digest that. I also think when, someone with such credibility like Dr. Gottlieb comes out and says, we think in the U.S. at least the pandemic is over, that just carries in spades. And so I think it's a really exciting time. If as a collective, from a sentiment perspective, people can start to just settle down and move on and understand that this is going to be with us, but we can have a really good economy. And so, I really still think that the secular growth markets are going to be certain spots of tech, like you saw NVIDIA yesterday and today, which is kind of bananas the last 2 days, and then energy, right? Because as we continue to reopen and as international travel continues, you can't run a plane on solar. You got to use diesel fuel. And so I think that, energy and technology, if I had to barbell, my portfolio is still where I have the highest confidence, over the short term and the longer term to really continue to generate really strong returns.
All right. My man, Rich Saperstein, one of this country's top financial advisors, according to Barron's and other publications. You're high up on that list. So what is your advice today? It's not like you've been bouncing off the walls bullish, maybe anything but. But now I wonder how you're feeling. What are you telling your clients?
Well, we remain fully invested in equities, and that is against the backdrop where QE has raised the prices of every asset class out there. The market in the last month has shook off a weak GDP print, rising inflation numbers, supply chain risks, China tensions, you name it, and the announcement of tapering, because the market is looking forward into the future where we're going to have strong earnings, rising cash flows. We're going to have a CapEx renaissance next year. And more importantly, we're going to look for a transition from a purchases economy to a service-based economy, meaning, Scott, you already went out and bought your cast iron pan, your wok, your gas grill, and now you're going to start going out to dinner more. So we think there's going to be a rebirth in the economy, and we're right in front of a secular growth period. In terms of your comment on the 10-year moving lower, I think it's misguided because the bond market is basically looking at that strong jobs report and saying the Fed will be more aggressive in the tapering, and I just don't think so. So we see the tapering running for $15 billion a month, no change in that, and no tightening until 2023.
Yeah.